Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Thanks for tuning in. Great to have you with us. Broker Daily Uncut. Alex, Costa, welcome.
Thank you.
And of course, Eva.
Hello.
We can get into it this time. We've got some people who know what they're talking about. So, yes. Before we sort of pile into today's show, we had a really insightful, well, the three of us really going along to the Broker Pulse function last Thursday. Huge amount of information to digest. Some great speakers. Yep. Chris Slater, who everyone tuning in, I'm sure most people will know him very, very well. Huge pedigree in the industry, many, many years with AFG. Did an incredible presentation on the value of data and analysing data. Had Eliza Owen from Cotality, unpacking the Sydney market, Sydney broker. So the logic was really sort of, digging into that. But I'd like to focus on really the Broker Pulse presentation, because that was really looking at, I guess, surveying consumers and looking at some of the conceptions, misconceptions, expectations of borrowers in different segments when they come to choosing a broker. There were some things that alarm me a little bit in there, Eva, from having been in and around this for a long time. Some of the findings or some of the commentary, the anecdotal commentary, was sort of concerning. But look, I guess on top of that, there's a lot to talk about today. We've got changes in rates, and I know you guys are bursting to talk a lot about what's happening in sort of the lender environment. But look, what was your thoughts about the presentation, Costa?
I thought it was really good, very insightful.
Yeah.
Especially Michael's, because he broke down and went really into sort of what the client wants from their mortgage broker, and that's honesty, trust, how our fee structure works, how we actually get paid.
Yeah.
Funny enough, which I found very interesting, that a lot of people don't know how we do get paid.
Do you not have to disclose to borrowers?
Yeah.
So when does that come
Well,
in?
that comes later. That's the problem. Is you have the chat and then you prepare your product disclosure, and it's at the bottom of it. It's like, okay, based on how much we're applying for, this is how much I would get paid. But that would mean the client has engaged you already as a broker.
That's right.
So it was a good wake-up call for me to realize, actually, I don't really talk about that unless I'm asked.
Yeah.
And it's hugely important for people to decide who they're going to go with.
So I don't have the presentation in front of me, so I do apologise, but I'm just sort of going off memory. And I'm sure that that Michael from Broker Pulse will make it available. But there was, so from memory, and please, sort of correct me here. So some of the sort of headline stuff is 1 out of 2 borrowers will go with the first broker that they meet, and then the other 50% will see
2 to 3.
2 to 3, and then a smaller percentage will see 3 plus. And so that was, so, you theoretically you should be winning 1 out of 2 because they don't go anywhere else. But a lot of the verbatims which startled me were around honesty, trustworthiness, acting in my best interest. And this is why I'm interested about the disclosure thing, because if disclosure doesn't come until you're further down the process, then maybe there's value in giving some sort of maybe brokers can do a better job of giving a snapshot of exactly. We know what brokers do, but
we take 30 seconds to say, hey, by the way, this is how I get paid.
This is what I do. This is how I get paid. This is what
just
I'm going to do
bringing
for
that
you.
discussion forward compared to just waiting until you have to send out those documents. Maybe the first contact or the first time you speak to them, shoot over an email with all those data and information. But there is something to learn from that, seeing that that's what the market's thinking.
And they weren't saying, I don't trust you. It was almost like I please act in my best interests. Please make sure that you
listen to what I need.
Listen to what I need. That was a really sort of a real sort of headline thing. So I was, and I'm used to, I've used brokers for all of my loans, but it's still a relatively small percentage of the marketplace in the, 40, 50 loans that I've ever taken out. And I've, because I know broking, all that stuff doesn't matter to me. I'm experienced in terms of being a borrower, so because I've worked in and around broking for 25 years. But it's a wake up call for me to understand how if I've maybe had maybe I've used a broker once and then that's forgotten. There was some really interesting data as well, and I do apologize for not having this data at my fingertips. But there was some quite interesting data about the
people changing brokers. Not really sticking for no reason as well.
For no reason. Well, I think because of poor customer service, it's got to be the long and short of it, right? Sort of poor engagement.
I guess also, being at a friends or family barbecue, you may be talking that you're interested in doing something, and they'll be like, I've got this mortgage broker. Yeah. And people are probably just willing to change because there's no connection with that previous mortgage broker that they used.
Yeah.
And they're probably better off seeing, that person's done well in their investments. This person's clearly helped them get in there, so maybe that's the right person for me.
It's really interesting as well because I find broking is so complicated because it's a relationship-based thing. Good broking is relationships and outcomes-based, but it's also very, very, very transactional. And the customer the borrower wants both things. They want my needs first, and they want this relationship, but they're transactional. And here's the thing, right? And we're working. Rebecca's working with a friend of mine who I've referred to Rebecca, because I referred. It's you that's dealing with him. I won't mention his name.
Oh, yeah.
So he has a broker that he's been very happy with.
Yeah.
And look, here's a case in point. He likes his broker, but his broker can't get him what he wants.
Yeah.
So he will change. Now that's transactional.
Yeah, totally.
Because he's not switching to you because of service or because he's a friend of mine and and I know
he just can't get what he wants.
It is purely and utterly outcomes based, and that's a transaction, right? So it's really complicated. You've got borrowers that absolutely put themselves first. It's not a two-way relationship. I have needs as a borrower, and I have a transaction that I want to take place, and I want what's best for me. Totally understandable. Yeah, so it's a complicated thing is in understanding the lopsided nature of this relationship, but being able to articulate clearly and transparently what you do, how you get paid, what the outcomes are for everyone. So I think there's a real learning and a real opportunity there.
Yes, I did learn a lot from that. Gave me ideas of how I can address concerns that people don't even put to words.
There's so many people taking photographs of all the presentations. It's
it's great.
And I take photographs. I've got this knack of taking them 3 seconds after the slide's gone. And getting the back of somebody's head in there as well.
Oh yeah, of course.
Look, we'll take a quick break there. We'll be back in a couple of moments. Welcome back. Great to have you with us again. As always, I had a quick glance at the auction clearance rates. I'm seeing a pattern which I'm sure everyone is well aware of, that auctions are kind of, since we've lost sight of there being any chance of a rate cut. Hey, there's now fears and indications that there could be upward movement. I think it's still in the minority, but there's certainly no chance of cuts. Auction clearance rate, look, they've not fallen off a cliff. They're kind of dropping down to sort of around and below that 70%. There's some markets that are kind of seeing some heat. It does indicate, though, that I think there's choppy waters ahead somewhat, and I think borrowers are now feeling a little bit more concerned and a little bit more tentative. What are you seeing out there?
Yeah, I'd probably agree with that theory. Just last week, Macquarie, Westpac, St. George have actually increased their fixed rates. So that's also a sign that,
they're pricing.
No increase. No decrease in the interest rates.
How much are they? Is it a little marginal nudge, or what are you
listen,
seeing?
I don't have the exact numbers, but from memory, I think we're talking about 20 basis points, something like that.
That's a quite a chunk.
So I don't.
That's pricing in a rate rise.
Yeah.
Well, there also is talk of that, a minority, but there are whispers of it. What happens, I guess, no one really knows at the moment. Yeah, inflation's increasing, so anyone's guess at the moment.
I've got a question for you, Eva. Are you seeing any of your customers? Are you seeing people looking to lock in those? There's some quite attractive rates, or the fixed rates, maybe 1-2 years. Are you seeing? Yeah,
look, it's more of the owner-occupier market that's still thinking about that, and I've discussed that many times actually with Phil during some podcasts. If you're an investor at 90% on IO, sometimes the rate 90% variable or 90% fixed is huge. Yeah. So sometimes it's worth fixing even as an investor. But clients, I think I've learned a lot from when we were on the way down and people that got stuck with super high rates.
Yeah.
People are not that keen to fix anymore. I find that it's harder to convince someone to fix now than.
I'll give you a throwaway comment, but Australia is not typically a fixed rate market. There'll be times when you get that
Maybe,
once in a cycle kind of move where fixed rates are so low that people jump in, but I don't fix anymore.
Yeah, I feel like it's not. Yeah, unless you're really struggling and you really need to meet a budget and you need to know what's coming out.
So a really good point, Costa, around just noting that those fixed rates are going up. There's obviously wider ramifications around the market in general. Are you seeing? And I know it's a tricky time of year. We're getting close to Christmas. What are you seeing in terms of inquiry and like both from your existing book and then also from new business coming in?
Still very busy.
Yeah.
Yeah, I think there's this FOMO. We discussed that this morning. Like people just there's obviously prediction of markets, and you've got some numbers here of market going crazy. So I think people still want to get in ASAP.
Cotality released some figures last week that the difference between the median price for a unit and a house in Sydney is 728,000. So that's the difference, and that's only growing. And then that goes over to a Domain report that was released last week that they're predicting at the end of next year, the average cost of a house in Sydney will be just over 1.9 million. So people
that's almost 10%.
Are looking at that going,
that's just
I need to get into the market.
Absolutely wild.
Yeah.
I'm again, as an investor, I love units right now. I just see huge
potential there.
I was looking at them this weekend. Particularly, I'm all over Melbourne, and I'm all over units
second
in
there
Melbourne.
on the list.
First is Sydney at 9.9, and then Melbourne second at 8% increase. They're expecting.
Yeah, in unit prices.
Unit prices.
Sorry, in 8% in.
That was
homes.
Oh, homes.
But for unit prices, Brisbane tops it at 10.4, Sydney 6.3, and 6.1 Sydney and 6.1 Melbourne.
Yeah.
Yeah. So that's what they're predicting for next year.
So this gap between, sort of houses and units, but the yields on units they're just off the dial. Mm-hmm. I'm looking. I'm speaking as an investor, not as a not as a buyer, but even as a buyer. I have a lot of people sort of working in momentum who are buying. A lot of them are buying units because just seeing the affordability, and I don't know. You got kind of, it feels over time there is a changing kind of demographic. People are staying single longer. Fewer people are having children. I just wonder long, and we're building. The focus is on building more affordable, medium density property. I feel that there will, maybe I'm wrong, but I feel at some point or other, people will fall back in love with units to a certain degree. But yeah, the yields are great as an investor.
Yeah, I'm always concerned about the supply of them. There's so many, it always gets, left behind for growth. So, but that might change as well. And I spoke to somebody that said the 3-bedroom units are the ones that are going to go crazy because they're good for downsizers, they're good for small family, they're good for everybody. So they are the market that's in the unit market would probably go.
Yeah. Great, that's what I bought last.
Perfect.
You're ahead of the curve.
3 bedrooms in it,
well, I've not settled yet, but
well, you go.
But look, I think it's really, really interesting. I know I appreciate that not everyone deals with investors, but the market is Sydney market. There's been so much growth in other markets as well, right? It's not just Sydney. I know Sydney's not growing dramatically at the moment. There's incremental sort of increases, but you've got markets like Perth and Brizzy still going apparently.
Yeah.
So the data
going
says.
everywhere. Yeah. We it's worth noting as well. We last week or the week before, Alex, we discussed Macquarie, stopping trust lending altogether, and we thought it would be some sort of ripple effect to that. And last week, CBA decided to take their own approach a lot lighter, but just saying we're only going to take trust lending if you already are a client or a customer of ours for 6 months. Was it?
Correct. Yeah.
6 months. So I think we see a sign there that trust lending is becoming more and more difficult.
Yeah, no kidding. Or more expensive.
Or more
How you
expensive.
want to look at it, because you're going to go to lenders that don't have the clout and can't offer the rates that the big banks. So there's
And we've seen like St. George, Westpac, even if they're not saying no, they're sending those deals to more commercial, private side of their business, and then it just gets lost in a vortex, and we never hear back. So it's becoming difficult.
I'm just going to jump back to something just crossed my mind from the presentation. I think it might have been Eliza Owen's presentation around the number. I can't remember whose it was, but the number of investor loans and the proportion in the market, and we're at a similar level to where APRA has stepped in. Now, I don't know, has APRA made any noises about that yet?
Yeah, there is noise that they would jump in and potentially lower the DTI on those applications, which would be very tight again.
So that's rumblings, but nothing in place just
Nothing official, I haven't heard anyway.
Yeah, no, it's just talk at the moment. But, if there's talk about it, you would think something's going to happen.
Signalling to the market.
Yeah.
We'll take a quick break there. Back in a couple of minutes. Welcome back. Good to have you with us again. I'm going to pick up with SMSFs for a second because I'm all over SMSFs at the moment. I'm buying my first property. I'm sick and tired of seeing my shares get kicked around like a football in my
I'm surprised it's your first property. You love
honestly,
properties.
I've sat there and look. I've watched my SMSF through my own wild stock picks go up to being 70% up.
And
it's
down.
now getting whittled right back down. It's not into negative territory yet, but it's not looking good. Fortunately, I sold off enough to put aside my 20% for my SMSF, and that's going through. But what how much appetite is there for SMSF borrowing at the moment?
Well, I was actually talking to a head of a mortgage company last week, and he was telling me 1 in 5 properties purchased are via an SMSF.
That doesn't surprise me. It seemed to be a slow start, SMSF lending for property, but there seem to be now a lot of players now.
Yep.
I think it's found. I'm sure people tuning in will say it found it a long time ago, but there's now good enough competition in terms of SMSF lending.
Yeah, and I think the main thing that drove that is it's so tight for investors to do anything outside of that. They get stuck. Well, let's do an SMSF property. In the meantime, go back to, outside of SMSF later. So whatever APRA's try to fix there, people just find other ways to do it.
Yeah, interesting.
And sometimes it's not better. So but it's huge, the competition, and lenders are always coming up with new ways to make it easier for clients to go ahead.
Are the rates in SMSF lending comparable with?
No, they're still higher.
Yeah. How much higher?
A good percent.
Yeah.
About early 6s.
Yeah, good percent higher, but still worth it.
For me, I sit there and watch my shares go up and down. Minutely, hourly, daily, weekly, and it's just fatiguing.
It's like, I can retire. I'm like,
you stick it up. I'm Phil, my business partner, Phil Tarrant, big fan of commercial, and he's bought commercial in his SMSF, and it gives him, I believe, pretty good yield. They're sort of, I don't know if the one in his SMSF is cash flow neutral, maybe even a little bit cash flow positive. So, but that's a pretty handy thing to have in your SMSF because then you're not sort of chipping in more money. I think that the property that I've bought, which is a 3-bedder in St Kilda in Melbourne, is probably going to require some funding, but it's got a pretty good yield on it. So that for me suits me because I can think, well, I can just sit there.
It's a set and forget asset through your super because it doesn't affect your day-to-day living. If you go out for avocado toast, you're not going to be like, can I afford the repayments this week? It's in your super. You're employed. The money goes into there.
And when the property's paid off, you can work out what your yield is, as an annuity, because you've obviously got to aim to have that paid down at some stage. So I have comfort in that.
Yeah, I think a lot of people find comfort in that. It's unless you've got a massive issue with your property and it can't be tenanted, you're going to get something. Yeah.
I know you guys focus on. Excuse me. Sorry, I'll start that again. I know investors your focal point, your specialisation. What are you seeing with owner-occupiers coming through? Because you must have owner-occupiers coming back, sort of through your existing client base. Are you seeing any trends there in terms of what they're looking to purchase, what their appetite is? You know, is there anything you're noticing in that sector?
I do have quite a few clients that I've started with, with Finni, and even some before Finni that came with me with Finni that, really followed the rent vesting trend, and we want to invest heavily, and they just have had enough of moving.
Yeah.
Just like, I'm just sick of it. I can't put anything on the wall. And suddenly they're just selling and buying unoccupied properties. But that said, they could have never done this if they didn't invest in the first place. So that definitely is the reason why they can do this now. But 2 years ago, that was like such a big thing, investing. I feel like people are getting tired of that.
Yeah.
There's something that's just not working, of having to move all the time or kicked out all the time, and not. It's becoming difficult, I think, for some of them.
Well, the rental, it's a paradox. If you're a rent investor, the rental market's tough, and finding either, a property that the rent isn't going to keep spiraling upwards. Your rent keeps going up, and if you don't meet the rental requirements, then you're looking for. Yeah,
and I think as they build families as well with kids, it
all changes. Then.
Everything changes.
I got away with it for a long time.
Yeah, so that's what I see anyway with quite a few of my clients. Yeah. Don't know. Do you see anything?
I'd probably agree with that statement. Yeah, definitely. On my end, I'm seeing exactly what Ava's saying. Just the hassle of constantly moving. It gets to a point where you're just like, I don't want to do this anymore. Yeah. And people just don't want to do it, so prefer just to purchase something.
Everyone has, I say everyone. Everyone knows someone who's got a great landlord who hasn't put the rent up for 6 years, but there's one in every circle. Everyone else is on that sort of merry-go-round if they're renting, so it's a tough gig. Guys, it's been great catching up.
Thank you.
Thank you.
I'll see if we can get, at least on Broker Daily, the full report from Broker Pulse. I thought it was fascinating.
Yeah.
It's very much kind of verbatims, rather than sort of, there's good data in there as well, but I think it's, it's a good snapshot and an insight into the...
Yeah. So then what do you need to... tell your clients right away. Otherwise they are the one talking to 2 or 3 brokers. Yeah.
And if you know what some of those preconceived fears and concerns are, you get a chance to sort of better position yourself.
Yeah.
Guys, thanks very much.
Thank you.
Good to catch up. For everyone else, thanks so much for tuning in. Love having you with us. Do give us your feedback. Don't forget, check out all the latest news. It's always there on Broker Daily.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.